Hey everyone, it's Nick with Us versus Herd. It is Monday. We made it through. Last night, futures were pretty wild. They were down a considerable amount, and then the market rallied hard pretty much all day. I mean, there was a little bit of choppiness at open this morning, and then the market pretty much just went straight up out of here. Today, I did buy back my AMC puts. I made $66 realized profit. Really chill day. I didn't really do any trading, really much trading. I did line up my shot. I'm going to go over some of my new trades. But first, if you made money today, comment below, got paid. If you lost money today, comment below, learn a lesson, and let me know if you want to join the UVH fam. Links are below in the description to our Discord, options trading group on Facebook. And if you want to join Robinhood, don't join Robinhood. If you want to join Tastyworks or Webull, links in the description as well. Webull will give you 4 free stocks for signing up and depositing just $100. So you get 4 free stocks. So if you want to do that, link is below in the description. So getting into it, I mean, today was a little bit of a ride. GameStop is down big. It closed down 100 points today, down 30%. I mean, is this it? Is this the moment they were waiting for? And when I say they, I mean big money, hedge funds. Was this it? Was this it right here? Is it going to fall? And obviously, I mean, it's gone from 500 down to 190 now after hours and dropping. I mean, it seems like the Wall Street bet boys are kind of falling apart here. Very choppy. Now we've seen it. Obviously, we've seen it go as low as 114, pop back up to 400 or 500. So let's see what happens here. Right now I have no position. Kind of just seeing what happens and seeing. There was some word on the street that GameStop might buy Zynga, stuff like that. What I want to know is, why doesn't GameStop raise money through this? AMC saved itself from bankruptcy. Think about how many jobs GameStop could save. Think about how many jobs AMC saved. So I think GameStop's in a very, 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 very dangerous spot here. Very dangerous spot, and it was always dangerous. It was always dangerous. I mean, I know, I get it. It's fun. You want to make money. Everybody's making money. But at some point, somebody's got to pay. Somebody's got to pay. AMC, same thing. I mean, AMC falling apart after hours right now. And this is why I bought back my puts. And I was shorting puts, so I was long. So the haters that say, hey, how could you buy puts? I wasn't buying puts. I shorted puts, meaning I wanted the puts to go down in value. So that means I was actually long the stock, but because premium was so high, 500 to 1,000%, I felt the best option for me in my portfolio was to sell some premium in there, and that's what I did. So I sold the puts, but I bought them back today. They chopped it up pretty good. Premium got crushed. So, I mean, I only had a small position. I'm not going big on these speculative stocks. So right now it's looking a little dicey on AMC as well. I definitely think that AMC could come back down here to 5 or 6, But that's just me. I mean, we'll see how strong the people that are pumping this are. Are they stronger than the hedge funds? We're gonna find out. This week ahead, we have a pretty busy week. We have tons and tons of earnings. We have Alibaba, Pfizer in the morning, UPS, ExxonMobil, and then tomorrow after market close, Amazon, Alphabet / Google. If you don't know, Alphabet is Google's holding company, Chipotle, and EA Sports. So tomorrow is a busy day, which kind of goes into my next position. Now, what I did something today in my portfolio I haven't done in years. I bought premium on a earning stock. I bought Alibaba. I went into the March 5th 270 call. You're like, why did you do that? Why did you do that? For me, for Alibaba, I'm a firm believer in Alibaba, their business. I felt like premium was really relatively cheap, 47% in the expiration I was in. I mean, liquidity was a little bit of an issue here, but bid and ask wasn't bad at the time when I purchased that call. So right now I'm in 270. I do think, I wanted to give myself time. I didn't want to go all the way. I didn't want to go too far, but I mean, for Alibaba, I definitely think that this could go 290, 300 is kind of what I'm looking at. Now that we found Jack and he's okay, I think it's going to probably come back up to here. Maybe I'd be happy with 285. 285, 290. Expected move right now for this week is $16, and the expiration I am in is $30. So I'm within the expected move. Premium should get crushed a little bit, so we'll kind of see what happens. It's a little bit of speculative. I mean, obviously today I was kind of feeling a little speculative because I also got into DoorDash. DoorDash, I bought the 250 call for March as well. This one has a little bit more time, 46 days out. So I'm in the 250 call for DoorDash. And what I was thinking about, last time DoorDash made quite a bit of money when DoorDash was pinned down in here around the 140, made quite a considerable bit of money when it was pinned down here, had a nice rally up to 210. Now it's being pinned again at 190. Now could it break this bull flag formation? Absolutely, to the downside, and that's why we have to use proper risk management. I mean, sub 180, probably going to get myself into some trouble. So I want to use proper risk management here. Sub 180, I don't like it. Above 180, I do like it. I went in. I do think, it did hit a high 250.60 the other day. I mean, 250 is a bit further out of the money than I like, but since I wanted to see if it could return back to these levels, I think it's going to pump, but we'll see if it happens. I'm not sure if it will or when it will. So that's trading. Set your profits, set your losses, and see what it does. I've primarily swing trading. I haven't really been day trading all that much just because I've been kind of busy outside of all this trade. SLV as well. SLV, I went in, but I'm in the 354 January 2022. So 354 days out. I'm in the 40 calls. Got crushed a little bit. Silver came down a little bit since I bought it. Like I said, I don't think in terms of silver, sure, it could come down to 22, could kind of ping him across here. But for me, silver is not really for me about Wall Street bets. It's more about the chart. And I said, hey, if it crosses back over 27 today, I'm going to buy. And silver, it dipped down, came back above 27, and unfortunately dipped back below, kind of chopped sideways. So we'll kind of see what happens here. But as you can see on the 1 year, we have a massive bull flag here. And I was actually eyeing it back in here, back over last summer. I was like, okay, I think that it's going to break out, and then it did, and then it stayed. I was waiting for it to come lower, and SLV never came lower. It's been holding. So I'm saying, okay, risk is low. I'm going to go in. I'm going to buy some leaps, and now that it's trying to break the bull flag from a technical standpoint, I'm gonna go in, and if it doesn't work out, it doesn't work out. If it comes back down on the 50 day, it comes back down on the 50 day. If it goes down to the 200 day, it goes down to the 200 day. I mean, if it maintains here and just chops sideways, we have plenty of time. So I'm just gonna put that trade on the back burner, forget I even have it, and don't really pay attention to it unless this thing has a major breakout, which right now is kind of questionable, honestly. And I get the whole thing with Wall Street bets and Citadel and blah 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 and distracting and this whole thing. It doesn't really matter. For me, it's a chart play, always was a chart play. I'm not emotional about it. I'm not about sticking it to the man. For me, I'm just trying to make the money that I can make in the market, and I see an opportunity here as a bull flag breakout, and I think that I'll give it a shot. Right now, after hours, now dip back up above 27. I know volume's low. Kind of see what happens. SLV was heavily traded today. It was up 7%. I mean, last night they did bring it up to 29, dropped it a little bit. Silver futures, same thing. They popped it up to 30, brought back down. Now still at 29. I mean, this was up almost 9%. So I'm gonna see what happens here. We're gonna see what happens. Maybe it work out, maybe it won't, but that's trading. That's trading. That's why you don't over leverage yourself. You don't put yourself in a situation where it's like, oh, if this trade goes bad, I'm going to lose my house, like some people did in GameStop, or I'm going to lose this, or I'm going to lose that. I'm going to, if I lose on SLV and people were questioning me in the Discord, stuff like that, it's like, hey, why would you do this trade? Aren't you afraid to lose? No, I'm not afraid to lose because I'm not over leveraging. I'm going to be okay. Win or lose, I'm going to be okay. If this trade goes to zero, my account can handle it. Now, I don't want that to happen, of course, but if the trade goes to zero, I mean, it goes to zero. the chances of an SLV going to zero is slim to none. I mean, I have a lot of time on this. Theta is not going to really hit it. The biggest thing is going to hit me is when it goes down. I'm at 181 deltas. So for every dollar SLV goes down, I will be down $181 if my delta, obviously my delta will decrease the further it goes away. Now, if it goes towards me, I'll be making $181 per dollar it goes up. And if SLV, goes my direction, then delta should increase and I should make more money faster. But that's the risk when you're trading options and when you're buying naked options. That's why, especially in the UVH Academy, I do primarily, for the options trade ideas, I primarily do spreads, much safer, high probability, just take it easy. This is a little bit more aggressive. However, it is relatively safe. So, right now for me and my portfolio, I'm kind of waiting for some premium to come in. CLOV, I'm waiting for some premium to come in here. I'm 18 days out on this. Airbnb, waiting for some premium to come in. And Snow, also waiting for some premium to come in. I'm in February expiration for all these. Looking to get some credits in, then roll into March and see kind of what's popping. Today, Space, SPCE, popped hard on the, they're going to be having a launch February 13th. I think this is going to be, my opinion, not investment advice. None of this is investment advice. This is what I'm doing. I'm thinking it's going to be a sell the news event, so I'm kind of seeing what's going to happen with here. I mean, I was trading it down here. When it broke 40, I stopped trading it because I thought maybe it was going a little bit too hot, and then it went almost up to 60. So I'm watching SPCE. I don't know what it's going to do, but looks like it is going parabolic. SPY today. And overnight, I mean, it got saved again by the 50-day. I mean, it closed under the 50-day here on January 29th. Here, today, it did hit underneath the 50-day, but bounced back up 374. So it's kind of just chilling right now. So we have a little bit of ground to wake up. I mean, we had a pretty bad week in the market last week. I mean, we went down pretty much almost every day last week. And so, I mean, is it going to push 385 or just going to chop here? We're right now between the 10-day and the 50-day, and it could definitely ping back and forth, ping back and forth, ping back and forth. We could have a green day, red day, green day, red day, and you just go back and forth. People are like, what's going on? Well, what's going to happen is it's going to steal your premiums. Qs had a very, very strong day. NASDAQ was up strong, didn't come down when it sold off last week, didn't even come down to the 50-day like SPY did. Is pushing back above the 10-day moving average. We could see it move back up to 330. One idea I had today was actually selling some puts on ARK-K, and I definitely wish I did because this thing just grounded straight up. When it was chopping in here, I'm like, you know what? Should I sell some puts on ARK? Should I not? Decided not to, and that's what it is. I mean, you got to fight FOMO. It's okay to miss opportunities, spot it, but I'm like, okay. I was looking to sell it at the 125 strike, 130 strike. Looks like it's a relatively safe trade. Would have been a high probability, just kind of eat away that premium. But you can't do it all. You can't do it all. But I think I do have a little bit of FOMO, but I'm gonna fight it. I mean, I think ARK's gonna try to head back up to 150 is kind of what I'm thinking right now. So, if today you were getting aggressive, if you were, just trying to get those home runs, just take it easy. Everything's going to be okay. Everything's going to be okay. I mean, Robinhood, they did raise another $2.4 billion, which, over the weekend, as you know, they had 53 stocks that were limited. Now they're only down to like 10 stocks, 8 to 10 stocks here. You could buy some more shares. You could buy AMC. They were limiting it like AMC, 1 share or 10 shares. Gamestop was like 1 share. AMD, Starbucks was like 1 share. It was like ridiculous. But, apparently Amazon can find some money somewhere. They were running out of money, but people keep giving them money because obviously Robinhood's selling your data. They are a cash cow. Like, how do they cash cow giving you free commissions? That's for you to decide. That's how you got to do some research. Check it out. If it's free, it's not really free. Okay? Look at Facebook. If it's free, not really free. Okay? Just trying to compare the two there. So, if you watch this to the end, comment watch to the end. And as always, stay safe, stay green. It's us versus herd.